Good morning. So today we're looking at 10K business models. What does it look like to build or create a business model that will pay you 10K take home per month? So 10K take home per month is our business model that we're looking at. It's very, very achievable. It's quite simple, so long as you know your numbers and so long as you've got the right revenue model in place. So what does a 10K business model look like? Let's just take a step back. One of the questions or the conversations that I often have with a client is, I don't need 10K, I don't want 10K. And then a few months later, 6 months later, a year later, we're often in the same conversation where people are saying, right, okay, I really need to take home 10K. That's my target. Where I want to get to is to take home 10K per month. Why 10K? 10K per month in the entrepreneur world seems to be the elixir number, the magic number that people want to earn. It feels like a mark of success as an entrepreneur to take home 10K. And for many of us, that kind of money is life changing. It's the step up from the corporate income. It's where we're achieving an income where you can really make a difference and you can achieve what we think is financial freedom. So financial freedom means different things to different people, of course, but it's understanding what that means to you and then how much that's actually going to cost. How much does financial freedom cost? Because of course it all has a price. So think about what you pay yourself now and how much money you're taking out of your business. So a typical corporate wage is between sort of 48 and 68,000 pounds per year. So the salary equivalent is 48 to 68, which are these light blue lines here that I've highlighted. And it's an average take home of about 3,000 to 4,000 pounds. Some people are on the higher end, which is the darker blue line, where they might be taking home 5,000 pounds per month, which is an average of about a 90,000 pound corporate salary. And it's around about this kind of time when people who are employed in corporate are starting to feel disillusioned. Maybe they've reached the limit that they want to work in their business. They might have reached the sort of higher end of their progression trail. It's where you start to think about, you're putting all the time and you're putting all the effort in and you're working all these hours for somebody else's business and you want to take more control, you want more financial freedom. So it's around about these kind of salary marks where people start to think about setting up their own business. Now, when you do go and set up your own business, it becomes much harder, much more difficult than people often anticipate. And what I see with a lot of new starts, people that are often in their first year, is that they might have gone from 3,000, 4,000, maybe 5,000 pounds per month, but they've ended up running a business that pays them maybe £1,000 a month or £1,500 a month. So they're barely earning national minimum wage. They've gone from a corporate salary to a self-employed salary, but haven't quite achieved that level where they've really replaced their corporate salary. So they're starting to struggle. So the first thing we need to look at in any business, whether you want to achieve your first or your next £10,000 take home per month, is where you're at now. If you're not even achieving the national minimum wage for a salary, which is about £17,290 per year, so an average of about £1,284 of take home per month, the first question I'd have to ask you is your business viable? Is the business model viable? Is it capable of paying you £3,000, £4,000, £5,000, £10,000 per month? How do you scale it from where it is today to where it needs to be tomorrow to pay you that 10K take home? Now let's look at a typical SME. So we've just looked at a bad one that isn't paying that, barely a national minimum wage. But a typical SME is somebody who has gone out on their own, they've started a business, they might be turning over about 100,000 a year, and their costs are about 41,000. So it's a 41% cost as a percentage of their revenue. So I'm not going to look at cost of sales or overheads, fixed versus variable, anything like that. We're just looking at a really, really simple model here. £100,000 worth of turnover, nearly £41,000 worth of costs, so net profit of £59,000 and corporation tax, assuming this is a limited company, at 19%. So the profit after tax per year is £48,000, which is roughly £4,000 per month. Well, it is £4,000 per month. So this is a typical SME business from somebody who has worked in corporate and built a business that now replaces their previous corporate income. So the question is now, how do you move forward from here and scale up when you are a small business working on your own with very limited costs, and what do those costs need to cover? Now, one of the things we try and make sure you do have covered is basic director salary. So think about all of the costs that you should be putting through your business that are tax deductible and will reduce your corporation tax. So we're trying to optimize the amount of money that we're being paid through the business. And oftentimes people are paying themselves more than they possibly or often think about, or the business is paying for more than they often think about. And they might think that they've got quite a cost heavy business, but they don't take into account all of the personal spends that their business is already covering. So for example, you would expect a business to cover at least $9,100 as a director's salary, and this is the optimum director's salary from 5th of April 2022. Most business owners, when they're starting out, are working from home, so you should be able to claim at least a £30 per month work from home allowance. It could be slightly more, it could be slightly less, depending on the number of hours you're working and the number of days you're working and the value of your qualifying costs. So we have a calculator that will help you identify the actual justifiable qualifying costs for work from home expenses. So say you've also got a mobile phone that you're putting through the business at £50 a month, and say you're travelling to business meetings and you're networking, so you might have mileage, travel, subsistence. All of those costs should be put through your business and shouldn't be costs that you're paying for personally out of your after-tax expenses. Say there's another £940 per year, because it makes a nice round number. It could be professional subscriptions, it could be books, magazines, trade journals and things like that. All of those go through the business, so you don't pay them out of your after-tax expenses, which you might have done if you were in corporate. Some corporates pay those types of things as expendables anyway. And the other thing we try and encourage all of our clients to do is put at least £500 per month from your company into your personal pension as a pension contribution. So we want to try and push that through too. So the business should be covering about £20,000 of your own personal costs as business expenses that are tax deductible. So it's an efficient way of getting cash out of the business without having to worry about drawing it as a dividend and paying tax on it. So these are costs that are not being paid out of your after-tax drawings. So let's look at a super lean small business. Now, the average business is in this first column. So this is the 41% £4,000 takeover. But if you wanted to get to a £10,000 take home, if your costs were 10 or 20%, now this is super lean. 10% business I have seen in some examples of, but it's very uncommon. Quite common is a 20% business where sales are 20% of the turnover, where costs are 20% of the total turnover. So £37,000 worth of costs with a turnover of £180,000 is probably the bare minimum that you can run a business on and still take home £10,000 a month. So this kind of business model is a super lean sole practitioner, a consultant, somebody who's working on their own. They've put all of their costs through the business, and maybe they've got some software costs. They might have the occasional little bit of outsourcing, but it's mostly the practitioner or the sole consultant who's doing all of the work. So the downside of this is that the one person is wearing all of the hats. So they're the admin, they're the operations, their quality, their finance, their HR. They're literally doing everything. And you're often selling time for money in this instance. You could be on a retainer, which is great because that gets more regular income in and gives you some flexibility if you were to take time off or you had some time off sick. But this typically is a super lean business. And the challenge with this is trying to scale a business like this because it relies on one person to deliver the outcome. So super lean, it's also the kind of business where you're dealing with one-to-many perhaps, and you've got memberships and you've got recurring revenue coming in that is passive or semi-passive. There's no such thing as true passive income. We all know that, right? So this is a super lean business, and that's business model number one. Now this is where people often start off, but the costs can sometimes spiral out of control. Now the growing SME, this is typical of an agency or consultancy, maybe a franchise model where you've got a higher percentage of costs. So 40 pence of every pound that you generate in revenue goes on costs. And these might be freelancers, staff, consultants, people who are helping you to run your business. So this is almost like the first level of being able to level up and scale your business. So you're starting to build a team of people who you can outsource work to, and you can deliver the outcome to your clients. So it might be that you end up being the salesperson and you're the person who does the work to bring people in. People know you, people like you, people trust you, and that brings the business in. But it's other people who deliver your product or service in the way that you want it delivered. So this is a scalable business model with 40 to 50% costs, and the minimum at 40-50% cost that you would need to turnover to achieve £10,000 per month take home is £246,000, £296,000 per year in sales to achieve a take home pay after tax of £10,000 per month. So your director's payroll and all of your other expenses are still covered within your costs, but this is the type of model that you could generate, you could create to take home £10,000 per month. So there's a big misconception that in order to take home £10,000 per month, which is a six-figure salary, you need to have a £7,000 or £8,000, 7 or 8 figure turnover business, and it's just not true. If you keep an eye on your margins and you know your numbers, you can create the 10k take home with much smaller levels of revenue. You don't have to be 7 figures. Now, starting to look at the other end of the scale, so again we're comparing this against our 4k take home average small enterprise. 70 to 80% cost loaded businesses. Now this is a high cost load business. This is a high risk. There's very little flexibility on revenue, but you've got very high fixed costs. It's very typical of retail or bricks and mortar manufacturing or high cost services. So the challenge with a business like this is that if you've got some if something happens, if a political or an environmental or a new competitor comes out, or something happens in the industry, or a global pandemic, heaven forbid, comes along and affects your income, your cost base is probably quite fixed, and it's much harder to flex your costs alongside your sales. So it's a much higher risk business. You're much more exposed if revenue drops, but you can't adjust your costs accordingly. But again, you can still see here, even at the higher end of the scale, we're looking at sales of 740,000, costs of 592,000, which is an 80% model, 80% costs and 20% net profit. Even at that level, we're still taking home £120,000 per year or £10,000 per month. So we haven't even had to move into the £1 million turnover to achieve a £10,000 per month take home pay. So you see how achievable it can be. Ideally, we want our businesses to be in the 40 to 50% costs, and that's total costs before tax. And that gives us much more flexibility for the amount of cash that we're going to take home. And if we can scale at those levels, then it allows us to take home even more, which is fantastic. Everybody wants that, right? So how do we make this happen? The first challenge is always going to be to know your numbers. You must know how much you're selling and what that sales mix looks like. What are the component parts? What's the profitability of each of your income streams? What makes more profit? What makes less profit? What covers your costs and what contributes to the additional income that you want to be able to take home from your business? The second element is cost. So there are only really three variables in a business. There's how much you sell and there's how much you spend. So it's cash out, cash in. It's not much more difficult than that. But of course, within that, there's a huge range of tools and things that you need to do, things that you need to manage within that business to make those things happen. Stuff that we have to do to grow sales, stuff that we have to do to reduce costs. So we always want to focus on building a business that will scale profitably but manage the costs effectively so that we can take home more of our hard-earned cash. I would always start from the bottom up. Start from your take-home pay target. Know exactly what you want to take home and then work out what sales you have to achieve in order to achieve that, and then how you can achieve those sales without overly increasing those costs. So we always start with the end goal in mind. And if you think of your take home and then you look at the sales you need to achieve and the costs that you are allowed to spend, your target costs that you must deliver the service by, it keeps you focused on growing an efficient business, a cost efficient business. Now, too many times I see entrepreneurs focusing on the sales, but they're not focusing on how much it will cost them to deliver those sales. So they end up selling more and making less profit, which is the wrong dynamic in our business. It's the wrong business model. So how do we go about making this happen again? We need to start planning. Now, in any business, we need to be working on our business and we're working in our business. So we need to work on our business to grow it. We need to work in our business to service our clients and deliver the excellence that they're expecting. We need to be constantly working hard to innovate, to disrupt the market, to make sure that our clients are loving what we do, so they buy the new stuff that we sell, and so that they continue to pay even if we have to put pay rises in place, even if we have to rise our prices. A lot of that is going on at the moment because of the current situation in the local environments. The current economic climate is difficult, inflation is rising, costs are rising. So we need to make sure we've got a business that is still scalable even in what is potentially likely to be a recession. So I always recommend to my clients we spend 20% of our time on our business and 80% of the time in the business. It's a Pareto rule. We want to make sure that we're building, growing, scaling, and whether that 20% is maybe 1 day out of 5 a week. So allocate a day for business development and growing your business, making sure that also includes time to keep an eye on your costs. So I would put business development and cost management almost in the same thing, in the same day. 80% of your time working on your business, in the business to service your clients. So 4 days a week working in the business, 1 day a week working on the business. If day scheduling doesn't work for you, the other way of doing it is to spend the first 90 minutes of every day working on your business before you spend the rest of the day working in the business. So I like to practice what I call 90-minute money mastery, where the first 90 days of my business are only spent on my business and only spent developing stuff that is going to create profit, extend profit, retain profit, or help me build profit into the future. And then I make them happen with 5-day profit sprints. So I'll have one objective a week of what I need to achieve. I'll make sure that runs from Monday to Friday, and I use those 90 minutes to make sure that every day I have time blocked out to achieve a specific weekly objective that's going to help me get to my next profit goal. It's always going to be consistent, persistent action that helps you achieve what you want in business. It all does come down to what's in our management accounts, and I can't stress the importance enough of going through your management accounts. Have a meeting with yourself once a month, or have a meeting with your accountant once a month. It doesn't matter which. Actually, maybe it does. I personally would encourage you to talk to your accountant and sit with them at least once a month to go through your numbers so that you understand what it is you're trying to get out of your business. So if we go back to this business model, for example, and our typical business in the first column is our £4,000 per month take home. If we focused on increasing sales by 12.5% and reducing costs by 12.5%, thereby reducing our margin, if we did all of that and focused on that for 90 days, by the end of that 90 days, we would be taking home an extra £1,000 per month. So in this case, I think it's an extra 1,188. My point is to take it one step at a time. Take it £1,000 step at a time. So don't try and get from a £4,000 take home to a £10,000 take home in 90 days. It is achievable in some businesses, but in many, it's going to push you too far over the edge, and it's going to be an impossible transformation. But if you can do it £1,000 a month at a time, or £2,000 at a time, depending on what you've got going on in your business, then you can achieve the profit goals that you want to. Don't ignore it, don't delay it, don't rely on chance. If you don't take action, if you don't stay focused, and you don't stay accountable to your profit goals, it's just not going to happen, and that's the last thing we want in our businesses. So the outcome, if you put all of this into practice, is more awareness, more profit, more cash, and of course you've achieved your profit goal, which is ultimately what we want. We're in business to make money, so let's not be embarrassed about that. Let's not be ashamed about that. Let's not feel awkward about that. Profit buys you your options, it buys you financial freedom, it buys you less stress, it buys you all the things that you wanted when you first left your corporate job and set up your new business in the first place. So let me know in the comments below what profit making action you are going to be taking today. What are you going to do differently to make yourself more profit for next week, next month, next quarter? So thank you very much for watching. And as ever, do let me know in the comments whether you enjoyed this and how I can help you. Please give me a thumbs up if this was helpful. Give me a heart if you're going to action this. And let me know your takeaways, questions or suggestions, and I'd love to hear from you. I'll speak to you soon. Bye for now.